Marvell's on tonight. I think Marvell's doing terrifically because they're lined up with Amazon. And look, I think a lot of this anti-NVIDIA, it has to do with Amazon. Amazon, of course, if you speak to Amazon offline, they're just hoping that NVIDIA is going to send them all the chips they need.
Yeah, although
they
are trying to develop their own to a certain extent, and they're using Marvell to help them do that. There he is.
Yeah, of course.
That's going to be interesting tonight. Looking forward to that interview.
My show's on at 6.
I'm aware. I got
two people.
Mad Money.
Two people who don't watch my show. My wife
and David.
NVIDIA's now down because of you.
Yes, because of me.
NVIDIA's down. Now, NVIDIA's going to be down $1.50. Look, I know this.
By the way,
it's written. I'll go out to the conference where Jensen Huang speaks in March, the GTC, and I will hear. Last year, I saw robots that were loading things at warehouses.
Yeah.
This year will be, because there's video. Look, everyone's written off NVIDIA. NVIDIA now is done, right? I mean, I just had another. It's done. Like, how did it get to be done?
Well, there's actually a lot of desk notes today say, is it a source of funds if you want to broaden your AI infrastructure exposure?
Well, look,
if you want to buy Ciena and Dell and Apple and Broadcom and Marvell.
Yeah, well, look.
Jim Cramer addresses NVIDIA's recent decline, explaining it as a normal correction rather than a drop in demand. He highlights continued strong chip demand, particularly from Amazon, and expresses confidence in NVIDIA's long-term growth despite some analysts suggesting reallocating funds to diversify AI investments. He notes that NVIDIA's underperformance contrasts with record highs in other megacap stocks like Alphabet and Amazon, reflecting a shift in market dynamic. While NVIDIA has entered correction territory, Cramer believes this sets the stage for a rebound as demand for its products remains robust. Cramer ties NVIDIA's performance to broader macroeconomic factors, including concerns about stagflation and regulatory scrutiny. He views the current correction as a buying opportunity for investors who believe in NVIDIA's leadership in AI and tech innovation.
This trade, Jim, is back with a vengeance. That's how we've been describing it. Yeah. And you could, I think, make the argument that it's even better that it is back the way it is without NVIDIA carrying everything. Because some doubted the fact that, well, if NVIDIA struggles, well, that means that the Mag 7s are going to go down, and then the overall market's going to be in trouble. Not so fast. You've had a continued big jump in tech positioning, according to Deutsche Bank today. You're looking at the stocks month to date for many of these names, and it is stark, obviously, where NVIDIA is relative to the rest. But they suggest positioning's very elevated again, factoring in modest reacceleration in earnings growth, bucking the gradual slowing over the last 3 quarters.
With regards to NVIDIA, and good analysis, Kerry, I think we all know that it corrects quite often. And then usually that is a setup for a very big rally, which I think is going to happen again. There's no indication that demand for the chips that they're producing has gone down at all. The only thing I would worry about with NVIDIA is when their supply catches up, there's just I don't see that on the near-term horizon.
Like, wake me up when that happens,
exactly.
Right? Because it doesn't feel like it's anywhere anytime soon.
So if I can just
go ahead.
You talked, Joe, about dip buying if Bitcoin corrected. Well, hey, guess what? Have it happening in NVIDIA. I'll bet you'll see the buying come in.
Oppenheimer today says that last week's acceleration in large cap growth, i.e. the mega caps, confirms a resumption of a larger breakout.
So here's what bothers me about it, and it absolutely could. I'm not dismissing. I'm not forecasting what the future ultimately could look like. I'm just understanding the environment of now. If there was this desire to own mega caps and to own mega cap growth, why is NVIDIA not performing as well? It would just be universal buying. So I call into question the possibility that if you look at around the world, Asia, weak. Europe, weak. The China trade, which everyone was so excited about in September and October, fell apart. The U.S. is the only place right now to invest. And I just wonder if we looked for post-election areas of the market where you saw underperformance. You didn't have the underperformance in NVIDIA. NVIDIA was performing through the election. You had underperformance in Alphabet. You had underperformance in some of the Mag 7, to your point on the chart. And I wonder if that's what's going on. I wonder if the reason why S&P growth is up 4% this month and S&P value is down 3% is more a fact of money just trying to find a home in the places that in the third quarter didn't see the strong outperformance.
I think it's mostly regulation. I think the stocks that were hurting, like Google, even people thought about, maybe coming after Apple. These are stocks that have rallied really, really hard because that regulation risk is not there as much. And NVIDIA wasn't just up, right? You had a 500% return on that stock.
It's still up 160+%.
This year.
this year.
Yeah, it's been fascinating to see, right? Because everyone's been on the broadening bandwagon, and now all of a sudden we're seeing growth come roaring back. And I think when you look at Bitcoin, right, it's all tied up in the Trump trade, and there are a lot of new things that are happening, right, that it makes complete fundamental sense. But I would just add to what Tim said. I do think the economic fundamentals are solid, but there is also concerns about inflation creeping back in. Are we getting to the end of this Fed cutting cycle? And what I'm starting to hear from investors is the word stagflation again. And when you're in a stagflationary environment, the playbook has been to go back to these mega cap growth names. GDP is also sitting at around 2.1% for next year's forecast. That's typically also an environment when these, kind of mega cap growth areas do well. So it's a good macro, but not quite good enough to support that broadening.
Yeah, and the broadening thing, right? So let's just look at the equal weight S&P 500. It had this nice rally off the election. It's given back maybe almost a half of that over the last week and a half or so. If they want to pull up the RSP, the BKX has come in a little bit. So to Lori's point, you've seen this massive move into the growth thing. I mean, I think about the Fed. We have it on Wednesday. We have a meeting in January. It's a week after inauguration. Maybe we continue to rally into that. We do have Q4 earnings coming in around that period. I think that's going to be a really dicey time because if we do have a hawkish cut this week and we start to kind of price out a whole heck of a lot of cuts next year, I think the Fed funds futures, the CME, is pricing in like a less than 20% chance of a 25 basis point cut in January. So if we have this situation where rates stay bid, we just saw rates not going lower, yields stay bid after the rally that we've had. And if we think that growth is going to start to slow, that's not going to be a great setup for equities. And just the last point about Bitcoin and what we saw today with Broadcom up another 11% after it rallied 24% on Friday. It's gained about $300 billion in market cap in 2 trading days. Look at Tesla. It's gone from $250 the day of the election to about $450 now. There seems to be a bit of euphoria. And how I pull that all together, it feels a lot like early 2000. I'm not trying to say that we're about on the precipice of a crash, or late 2021 when we saw a lot of price action like this too. So the sentiment is unusually bullish right now, and it's getting more and more crowded, especially as we see some of the broader trades kind of coming to an end a little bit in the near term.
I'm not changing my mind on Nvidia one bit.
I bet you aren't.
You
haven't?
We're down 3.
You've been right not to. Let's get to Honeywell, guys, because we did get news there.
Yeah, because I'm sick of Nvidia.
It's a story.
One last note on that. People pointing to Nvidia's weakness on a relative basis compared to the other Mag 7, and we mentioned a 2-month low today. Is that a source of funds to broaden out your AI infrastructure playbook?
I don't know. It's not necessarily a source of funds. It's a good time to invest. Right. So for us, it's not going anywhere. And so if you've made those kind of returns, then this is how do you get into something that's too late? So as everybody's looking to, have I missed the tech trade? Have I missed the cryptocurrency trade? Have I missed the energy trade, especially with the post-election run-up? We're thrilled to see a little bit of weakness, especially in what we expect will be seasonally strong trends into the Santa Claus rally. And then I guess the beginning of Q1 is a little bit of anybody's guess.
Nvidia, I know we talk about it being at a relatively expensive multiple, roughly 35 times forward, but given that growth rate, that's very much justified. So I'm much more comfortable in this part of the discussion than I was in the crypto discussion.
That's why I didn't ask you about it. Nvidia, by the way, is officially entering correction territory. It's down 10% from its November 7th closing high. Yeah. We'll talk about a related stock that is having a really great moment of its own, but we'll do that a little bit later because we have a move around it. But we knew that at some point these were not going to trade as a monolith. In fact, they've separated themselves from one another. You've had record highs today for Alphabet, record high today for Amazon. You've had recent record highs for Meta and Apple. And then the distance is a little bit for the Nvidias of the world or Microsoft, which hasn't hit a high since the summer.
Yeah, so it's very interesting. What I wrote down in my notes, these are the stocks in the Mag 7 that are at all-time highs, right? Apple, Google, Meta, Amazon, Tesla. And what isn't on that list is Nvidia. So all of the talk we've had over the last few months about the market broadening, the market did broaden in the third quarter. It's not broad in the fourth quarter. We have a little chart if you want to show it. I mean, we've really gotten to a point where 76% of the market gains are back in the Mag 7.
Take us through this. What did you want to show?
Yeah, so So what you see is that in the second quarter of this year, we went from the Mag 7 represented 110% of all the gains in the S&P. The other 493 names were down. And then that changed in the third quarter. They were only 9% of the gain, but now they are 76% of the gain this quarter, except Nvidia. So the market, if you talk about broadening, it's just the Mag 7 is broadened away from Nvidia. It's the other names in the Mag 7.
These are
Jim Cramer emphasizes Nvidia's correction as a typical market adjustment, not a sign of weakening demand. He highlights the company's strong AI chip demand, particularly from Amazon, and sees this dip as an opportunity for long-term investors. While other megacap stocks outperform, Cramer remains confident in Nvidia's growth potential. Cramer also notes broader economic concerns like stagflation and regulation affecting market trends. Despite these challenges, he believes Nvidia's innovation and leadership in AI position it well for future success. How will Nvidia's advancements in AI impact other industries like healthcare and transportation? What's the best approach for investors during corrections in high-growth tech stocks?